With only 5 days remaining of September, how is Bitcoin likely to close and what are the charts looking like? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a great day today. In today's video, we're going to be going over the monthly charts, discussing what the monthly charts are looking like and how we are looking moving into the monthly candle close in just under 6 days. We'll also go over the daily, weekly, and of course the short-term price action. Before we get into it, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in our VIP channel, we post trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive charts. You can see our most recent trade did over 78% profit on Bitcoin, a huge short taken from all the way up at 27k. If you're interested in joining the VIP to get access to our trading signals, and of course our group chats, our trading chart and education chat, our help chat, our news chat, our video chat, our trade setup chat, and of course our general chat. If you're interested in all of that, go ahead and contact me in the pinned comment in the free channel to get more information. Let's go ahead guys and dive into the video, starting on the market data. How are we looking as of today? Well, 24-hour volume is up 42%, and that is generally quite expected as we move out of the weekend and into the new week. Volume does generally follow. Sitting at a whopping 45 billion, and 24-hour liquidations are sitting just shy of 50 million, down 0.6%. Moving to September, we can see with just under 6 days remaining, we are currently only 1.27% in the green. Now remember, our monthly opening price for September is actually not too far off. If we take a look at the monthly chart over here, we can see the monthly opening price is 25,935. So 25,935 is the monthly opening price. The current market price of Bitcoin is just under 26.3k. Again, September is a historically bearish month. We generally see red price action during September. It's about a 76.5% chance that September was going to close out red, and with 6 days remaining, that is still a possibility. So again, it'll be very interesting to watch how September does actually close out. We're discussing that in today's video. Moving on from there, looking at these liquidations, 49, so 50 million in liquidations, and shorts and long pretty much evenly split down the middle. Again, a signal of indecision, a signal of chop on both sides. So liquidity grabs on both sides, on the short side and the long side, the market dropping massively and then spiking a bit as well. Moving into our volatility next, we can see the 30 and a 60-day period. Again, very similar, both consolidating sideways. When we see compression, when we see sideways price action, it is generally indicative of a move that will come soon. As volatility compresses, we see tightening in the markets, we see tightening in price action, we generally see a directional move that eventually follows that is quite aggressive. So moving on to the DXY, the DXY has seen what we said yesterday, which was that move upwards to retest the upper level of resistance of this horizontal resistance range. Currently retesting around 105.9. Again, if we continue through this range, it is going to be incredibly bullish for the DXY. And if it's bullish for DXY, it is bearish, okay? Bearish for Bitcoin, it is bearish for traditional markets. If we take a look at this chart over here, we can see that in this recent price action, it's 13 weeks of uptrend, okay? It initiated around about the 13th to 19th of July. If we then take a look at Bitcoin's price action, we can see this downtrend for Bitcoin has been going for around about the same amount of time, right? If we look at the downtrend, it started around about that 19th to 13th of July. Again, we've been in a 13-week downtrend. So these assets are generally inversely correlated. And now, a lot of people say, well, the DXY isn't correlated to Bitcoin, it doesn't matter. But when you zoom out and you take a look at the direction of which these assets are moving on a higher time frame, the correlation gains strength, so negative strength. It's only on a short term, like a daily, intraday, where the correlation is very weak. But when you zoom out to a high time frame, okay, a weekly, a monthly trend, then it becomes very important. So looking at the DXY here, guys, if we do continue upwards, this is going to be even more bearish for the stock market and for cryptocurrency. We could see cryptocurrency aggressively correct. However, resistance is resistance until it is not. And if we do reject from this range, if we do correct from this range, we could actually see some short-term relief for cryptocurrency and Bitcoin. If we go ahead and just delete this chart and zoom out to a high time frame, we can see that the DXY is actually looking relatively strong where it is right now, clearing out these 2-week highs right over here. Okay, if we go down to a weekly chart, onto a 7-day chart over here, we can see again on the weekly, we have broken through this neckline, we have broken right through there, and we have nearly closed this weekly candle above. So the weekly charts are actually showing some strength on the DXY, and therefore we could see a continuation upwards. We have to be prepared for that. Moving from the DXY, we'll go to the stock market and then jump over to Bitcoin. S&P 500, exactly the same as we've been talking about. Again, ever since all the way back, we're talking weeks and weeks ago, all the way back over here, when we talked about Bitcoin topping out, we said the S&P 500 is reaching resistance. We've touched this neckline confluence. We've got the horizontal resistance, we have the diagonal resistance, okay, with the gap into VRPV. We had this triple confluence over here, suggesting a rejection is likely. We saw a rejection. We still do expect our target of 4,330 to 4,300 to be reached, which is the confluence point between the horizontal and the diagonal and the gap into VRPV. So this triple confluence point right over here is where we expect the price action to end up. Dow Jones is looking very, very bad. There's absolutely no doubt this chart is looking bad, okay? We have a potential rising wedge formation. We have 1 point, 2 points, 3 points, 3 points over here, 4 points, and 5 points. We have 5 points of retest, which means we have a valid rising wedge structure. The rising wedge structure has broken toward the downside, so we are now in a downtrend. We expect that downtrend to continue towards our nearest local support. So we're looking at 3,300 next if the DXY continues upwards. So again, the markets are not looking amazing. We're looking relatively weak. However, Bitcoin has still got something that the stock markets don't have, and that is high time frame supports. So let's talk about this right now and discuss what this means on the macro first and foremost, on the monthly, on the weekly, on the 3-day, on the daily, and then jump into the short term. Let's dive in. I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Starting on that monthly chart. As we can see, guys, Bitcoin on the monthly chart. It's been a bit of a roller coaster. There's been a lot of mixed opinions. People have been saying, oh, we're in a bull run, we're in a bear market, we're in this, we're in that. And the quick answer to all of this is everyone has technically been wrong this entire year. And the only thing that's been correct are the charts. You have to listen to the charts. As we've been saying, we have been out of the bear market for a very, very long time. In fact, we actually ended the bear market all the way back in, I think it was even late 2022. If we take a look at this channel over here, we had our bear market downtrending resistance. This diagonal trend line represented the downtrend in the bear market. We officially ended the bear market in October 2023. That is when the bear market technically ended. We had one more capitulation downwards as the FTX exchange crashed, sending us to our bottom, our absolute bottom. From that point, we developed a new structure. That structure was, of course, a bullish compression structure, a bullish consolidation structure, known as a falling wedge. We had our falling wedge structure over here. Again, we talked about all of this stuff here we talked about on the channel at the time, okay? We predicted all this. We were expecting bullish reversals. It was all discussed. I'm just going over what has happened. We saw a bullish reversal structure, which marked, okay, this marked the ending of the bear market and the start of a macro reversal. We started a macro reversal over here. The macro reversal took us into a daily uptrend, okay? We broke through 24.4. We broke through 25.2. That took us into a weekly uptrend. We continued into this weekly uptrend, gaining strength. And we didn't break through the macro uptrend. So the macro uptrend resistance was sitting at 32K. We have not yet done so. So to transition from a weekly uptrend to a macro uptrend, 32K has to be broken. Moving back to that monthly chart, we can see that represented by the red line. So 32K, incredibly important. Furthermore, if we take a look at that 4-year cycle, and the 4-year cycle is simply a date range trend. That is all it is. It's a date range trend, the days between the bear run tops, the bear run bottoms, the reversal to the bull run initiation, and of course the bull run top. That is all the 4-year cycle is. It is a date range trend. If we take a look at the date range trend, we can see we are in this reversal phase over here, okay, according to the 4-year cycle. Now again, there are limitations of the 4-year cycle, and there are reasons why the 4-year cycle could potentially fail. We're not going to get into that in today's video, maybe another time. But today, we're just going to be talking about this 5-day close. And we're looking at 5 days of this monthly candle close. How is it looking? What does it mean? And where could the price go? Okay, so first and foremost, guys, we'll give you a quick overview of the price action. We know that to become macro bullish, we need to get above this level over here. We are macro bullish above that level. If we take a look at the current price action, we have seen in our prior month, in August, we saw quite a large correction toward the downside. In fact, that correction resulted in a bearish engulfing candle, taking out the monthly lows of May, of April, and of course of June. We took out the lows of those levels, which of course initiated a downtrend. That initiated a downtrend. On the daily chart, we can see that downtrend initiated over here, resulting in a shift from a uptrend into a weekly downtrend, guys. We entered a weekly downtrend. Excuse me for 1 second. Just gonna grab some water. My throat's a little bit sore today, guys. Hold on with me for a second. So, 28K, we lost 28K. We entered a weekly downtrend. We've been in a weekly downtrend ever since. That weekly downtrend is represented by this downtrending diagonal resistance, which is of course this black line right over here. This downtrending diagonal resistance indicates the current trajectory of price action, or betterly known as the current trend of price action, and it is of course sloping down, and therefore we're in a downtrend. So for us to break into a uptrend, for us to break into a weekly uptrend, we need to get the price above this downtrending diagonal resistance. It is quite simple, guys. We need to get the price above that downtrending diagonal resistance. Until we get above there, the weekly downtrend remains. Now, while the weekly downtrend remains, this monthly chart is going to continue to look bearish because the trigger point of the weekly downtrend ending is sitting at around 28K, okay? And for the price action to turn macro bullish, we need to get the price above 32K. So there's still a lot of ground to make up there if the price on the macro scale wants to start looking technically bullish. If this 5-day candle closes below 28, if it closes below 27.3, which is its black line, we are going to be technically closing out this candle incredibly bearish, and that could result in a continuation downwards on the macro scale. So moving back to this chart, guys, if we do take a look at this and say, well, if we fail to get above this downtrending diagonal trend line, eventually, right? Eventually, we're going to be losing this horizontal support. The reason being is if we drag this trend line across and we took a look at the date range from this price action to the trend line, the longest we can remain under this trend line prior to the breakdown of 24.4K is going to be around 42 days. So in the next 42 days, either we're going to break out of the weekly downtrend and continue upwards, or, it's a big one, we're going to lose a 400-day long support, which marked resistance all the way back at the peak of the falling wedge structure, okay, the rejection point before entering a weekly uptrend, and the base of support of this weekly uptrend 2 separate times. A loss of that level will not only eradicate the horizontal support on a chart, but from a technical structural perspective, it is going to eliminate some very key levels on the weekly. We'll talk about that in a second. If we lose 24.4, we will be flipping bearish on the 3-day Ichimoku cloud. Again, when we break below the Ichimoku cloud, we generally continue that trend downward. It doesn't tell us how low we go. We have to look at the structures of that, but it generally tells us the direction of price action will continue downwards. Again, if we lose this range, 25.27, okay, again, the monthly opening price for Bitcoin, so if Bitcoin closes September red, we lose the lower band of the Ichimoku cloud. That will signify continuation lower, likely dropping through the support all the way down to this lower chunk of support. Again, completing the head and shoulder measured move target, guys. So again, we are in a very delicate position. In the next 42 days, we are going to see a very important directional move play out for Bitcoin. If we do break upwards over here, we still need to clear 28K. We still need to clear 28.4K before the price starts developing major strength. So moving to that weekly chart, let's talk about this over here, guys. Two things. Number one, really quickly, for the bulls to take control again, for us to say, okay, we are bullish, we're looking strong again, the number one most important thing that needs to occur is the price needs to get back above the Gaussian channel upper band. We have to break above this level. If we break back above this level, that is when we can say, okay, there is strength, okay, there is buying pressure, okay, the price can potentially go up to retest 32K. Until that happens, any sort of move like this is still going to be considered bearish, guys. Is still going to be considered bearish. Now, if we lose 24.4, if we close out this monthly candle red, if we lose the 3-day Ichimoku cloud, the probability of a loss of the midline of the Gaussian channel significantly increases. If we lose the midline of the Gaussian channel, as we have seen in the past, that can generally result in a breakdown below the lower band of the Gaussian channel. Again, guys, when we lose, we'll always show on a daily chart. We'll show on a daily chart over here. When we lose the midline, we almost always, the very high probability of, so it's like 80%, okay? When we lose a midline, we almost always go below it. We almost always go below it. We lose a midline, we almost always go below it. Again, we'll show one more example, okay? We lose a midline, we almost always go below it. Again, we can go over and over and show you how many times this has happened. It doesn't tell you how deep the price action is going to go. We have to look at the structural levels for that, but it does tell you the overall direction of the price action. If we take a look at the Gaussian channel on the daily chart, we can see we are still very bearish over here, guys. For the price action on the daily chart to start looking bullish, we need to get from below the Gaussian channel into the lower band of the Gaussian channel to flip strength. You can see over here, we attempted to do so at 28K, which is where we retested that downward, horrible trend line drawn in, guys. We retested that downward diagonal trend line. We failed to do so. We are now back underneath that trend line. So even on the daily chart here, we are seeing weakness. Look at the market cipher B, guys. Look at what is happening over here. We can see with that rejection, we're seeing a small shift. Okay, we're at positive momentum, but we are seeing weakening positive momentum. Look at the RSI over here, guys. Look at what is developing here, guys. We have this uptrend on the RSI again, this uptrending diagonal trend line. If we lose this uptrending diagonal trend line prior to breaking out of that diagonal trend line, the probabilities of a correction significantly increase. We'll show you on this chart over here, since it's going to be slightly more clear. Let's go ahead back to a daily chart and show you that one more time over here, as it's going to be a little bit more easy to see on the color chart. We can see, okay, we have this RSI over here. We have the price action above. If we draw an RSI trend line over here, this again represents momentum, right? So if we lose this trend line, we have a negative shift in momentum. If we lose momentum, if we lose this strength that we have, we go into weakness, we go into negative momentum, the probabilities of a continuation downwards surge massively. We're looking like a 80% surge in probabilities of a continuation downwards. So we do need to break above this level of resistance prior on the daily to this breakdown occurring. Whatever happens first is going to likely be the direction of which Bitcoin continues in over the coming weeks. Okay, we'll say it again. Whatever happens first, the price action up or RSI down will likely trigger the continuation for price action over the coming weeks. Watch out for it, guys. It is very important. Let's finish up the video really quickly on short-term price action. If you watched yesterday's video, you would know pretty much everything we said actually played out. We saw a correction from this range. In fact, we've been really bang on with this short-term stuff like recently. We told you guys, short this level of resistance, perfect short. We look for a target around 26.2. We hit that target perfectly. Yesterday in the video, we said we were looking like we were retesting this range of resistance. We were expecting a rejection deep into that range. We saw a rejection deep in the range. We've actually wicked below it momentarily at 26K, which is good to see because we are in shorts. And we have short-term rallied back up to retest the 50 EMA. Again, closing the gap in volatility, retesting this respective level of resistance. On this short-term chart now, we can actually say for sure we do have some local resistance developing. Of course, we do have a main resistance at 26.4K. The 26.4K is going to be a range low over here on the hourly chart of September. So that opening price on the 22nd. We do have, of course, the 50 EMA acting as a temporary resistance. So again, if you are looking for shorts, new shorts, you can plant your stop losses above that level and you can look for lower prices. Again, that is something you could potentially be doing. Again, we are already in shorts. If you're following the channel from the VIP channel, you would have taken shorts all the way up over here. If you're following the channel, you're looking for shorts over here. Okay, so technically we're already in shorts, but if you're looking for new shorts, again, it's not the time I'd be shorting personally. Again, your shorts should have already been taken, but if you're entering late shorts, you could potentially go ahead and look for swings down to POC or even the lower level over here, but just keep your stop losses tight. Just in case we see some short-term reversals, we do have this downtrending diagonal resistance developing. This could potentially, and I say very potentially, very loosely, because it is kind of just eyeballing over here, developing into some sort of channel formation. Now, again, for the short-term price action, this is the short-term price action over here, okay? To flip bullish again, we need to break back above this downtrending diagonal resistance, okay? So while we remain underneath that downtrending diagonal resistance, we are in a downtrend. Where could the downtrend take us? Okay, it can take us to the range low. That is it, guys. I'll wrap up the video. Thank you so much for watching. I hope you enjoyed the video. I was going to talk about this, but maybe we'll talk about that in tomorrow's video. Also, check out the Crypto Academy. It's a 10-unit course, link down below if you want to learn how to trade and learn technical analysis from the base level up. And of course, guys, hit those comment buttons, subscribe to the channel, and of course, like the video. And we do have a second channel, which is MegaWhale Alt, so you can check it out on Telegram somewhere. We haven't posted anything there yet, but we are going to be planning to post videos on there shortly, altcoins, etc., etc. Thanks for watching. See you guys next time. Cheers.